All right. Welcome to Liquid Sundays, everybody. Thanks for hanging out this afternoon. It is Sunday, March 29th, 2026. We're going to go over the SPX market overview. We'll look at some notes. We'll look at some charts and try to formulate a plan of action for the week. So we'll start off with just you can read along with me here. Go through this stuff here, and then we'll look at some charts. I see some new names. Welcome. If you've never partaken, basically going to go over kind of top-down analysis, SPX weekly, daily, hourly chart. We can review some of Friday's action, Thursday's action. I did post a YouTube video that you can find linked in the chat on Friday's action. If you'd like to study that, feel free. All right, so let's get started. SPX near-term trend remains bearish with parabolic decline accelerating on rising crude, dollar, and yields. So we're going to want to watch WTI, we're going to want to watch Dixie, and we're going to watch TNX. Momentum nearing daily oversold, but not weekly or monthly. Breadth worsening. No capitulation or fear yet. Expect decline into early April before potential bottom, similar to last year, possibly near 6,200 to 6,300 support. You can see right here, we are, change of character here on the SPX weekly chart. And this candle is a pretty strong bearish candle closing near its low below this important support. If you look to the left here, we're right around this little consolidation period here from August of 2025, if you will. And likely, if this breaks down further, we're just going to retest, the breakout here. So this is the first kind of area that we're going to look to, like around 6,200. We may get a slight bounce before hitting that, but ultimately, I do think that we're going to come down and test this. But we'll keep an eye on that. So multiple technical supports are converging there. Spring low likely by mid-April, no later than mid-May. Volatility is rising, so buying dips is premature. WTI crude may head to 110. We did put together a trade idea. If we do breach the 100, we're likely going to go to 110, possibly 115. Stay diversified and overweight defensives, utilities, energy, telecom, pharma until tech stabilizes. Tech broke support, equal weighted RSPT at yearly lows. NVIDIA broke below 171. So target on that is going to be 160 to 163 short term. And SMH nearing 370 to 374. It's a make or break level. We'll take a look at that chart. QQQ just above 560. TLT may bottom in May, suggesting yields peak then and fall sharply. So let's look at some of these charts here. So obviously this is the SPX. This is the weekly chart. And if we look at the daily, get rid of some of these notes here. If you look at the daily here, kind of predicted that we were going to get a potential kind of channel, something like this, and that's exactly what we're getting right now. So we're kind of seeing something like that play out. You can clearly see, when you zoom out at the weekly chart here, you can see when we go from a bullish channel, and then kind of buy the dip territory, right? All the way from basically last April. Once we kind of cleared the resistance here, it's kind of by the dip, by the dip, by the dip. And then you can see, obviously, there was this, channel here that ended up breaking down, kind of a rising wedge, if you will. And so now we're basically breaking down below supports, and we're going to monitor the situation. Obviously, um, market never goes straight down, never goes straight up. But topping is usually a process, and bottoming is usually an event. Case in point, um, this was a topping, kind of choppy. You get kind of a bear flag here, and then parabolic bounce, obviously, in April, and then we kind of went, straight up, a little V shape. That's a V shape recovery. Not sure if we're going to have a similar outcome, but it's a possibility. There's also the possibility that we get something more like the 2022 bear market, which, as you can see here, was more of a choppy, more of a extended kind of playing out consolidation. Obviously, we did not get back up above December 21 highs until January of 24. So, big difference between this type of correction and this type of correction. So, we're going to want to just stay vigilant. We'll keep an eye on all those key, um, you know, crude, Dixie, and yields. They'll give us a good idea of how to be positioned. So, daily chart of the SPX there for you. Obviously, we're looking at the VIX. VIX at 31. So, obviously, when we're up here, we're getting big swings, daily swings. Beautiful volatility for day trading. This is kind of what day traders thrive in. Not great for swing trades. Once, when, and if the VIX comes back down below 20 in the near future or below 18, ideally, we can think about a little bit more kind of long term swings, potentially thinking about buying the dip. Um, if we do get, volatility event like we had in April, or like in August of 24, you're going to see, obviously, we like to trade a lot of options. Options when the VIX gets this high are very expensive, and you're better off buying good companies, usually shares, commons. When the VIX does stuff like this, I think it's a great opportunity to add to long-term portfolios. Um, if you have good companies, good fundamentals, um, this is where you want to add shares. But options are very expensive, and what happens is the options are priced very high, and when the VIX rolls back over, you get IV crush. So it's not ideal to swing options when the VIX gets real elevated like this. So just something to be mindful of. Um, we've been watching Bitcoin, as kind of like risk on, risk off sentiment, and clearly we're still in this downtrend here, and it's kind of failing to reclaim this trend line here. I did have a short term, forecast bounce on Bitcoin for between 70, 74. You can see here between the 618 and the 50%. We did get up and touch 76,000. So I'm not sure if we're going to bounce much more before we kind of pull back. Um, but you can clearly see again, just like the SPX, we're in a downtrend on crypto. So this is a risk on indicator, and this is clearly telling us that risk is off. So we can keep an eye on that. The QQQ, we talked about the QQQ. This is obviously tech tech heavy, and breaking down below our support here of this was basically needing to hold for a short-term bounce, and the low there was 580. Broke down the low there, and we're testing this consolidation right here. So if you can see, going back to the notes actually, um, that I posted, QQQ, we're just above 560, and again, very strong bearish candle breaking below key support here. So if we take a look at like the squeeze and my ready aim fire, it looks like this thing wants to squeeze down. And I did mention, just like on the SPX chart, on these weekly charts, these weekly squeezes can have, big results. So like SPX, same thing, kind of talked about this. Talked about this a little bit here. This looks a lot like this, right? So we may get a greater than expected move. That's what the squeeze is telling us, um, when the Bollinger Bands are compressed inside the Keltner channels, and then once they release, you get these greater than expected moves. So in a squeeze here, looking like it wants to fire down. So we'll keep an eye on that. So if QQQ gets down, let me see here. Um, it's at more of an attractive level here than it obviously was, up here. If you're trying to, if we were trying to buy the support here, um, certainly not as favorable because of what happened last week. This flush down here, so this is I'll say that this is more attractive to buy dips than this, but I think buying dips is still a little premature. So maybe 1 to 2 weeks, um, and we'll look for some counter trend signals. So example of that. So here is like the daily chart on the QQQ, and you can see here, same thing, trending down, and we have the squeeze firing down. On a positive note here, we have ready aim fire that is below the um, bottom channel line here. We got a ready aim and fire print, ready to potentially put in a short-term bounce at the very least. Example, something like this. This wasn't quite as oversold as this here, but if you come back here to, let's say, November, you can see that we kind of got a squeeze down, then we got a ready aim fire, and we did get a little relief rally here, right, into the end of the year. So just some little nuances with the squeeze and the ready aim fire. So obviously tech, usually leads the way. So that's why we pay attention closely to the cues. And also, we've been obviously monitoring closely, WTI. So this is not a political, not a political discord or political event here that I'm trying to promote any type of agenda here. But I'll just say that the situation in the Middle East, while tragic, and as far as what's going on in there, the biggest concern that we have as far as the markets go is the effect on the energy sector. So oil you know, coming out of, um, you know, that region, out of the Strait of Hormuz, is at like a standstill right now. Many of you are well aware. So I don't know if this situation is going to get resolved anytime soon. It doesn't feel like it. Um, and the chart is telling us that likely this is going to push higher. So with these rising oil prices, energy prices, it's going to, put pressure on equities. So we just need to monitor this daily. Obviously, we get information real time nowadays, and things can kind of turn on a dime. But as far as a technical level, we have what looks like a daily triangle trying to break out here. And as far as the squeeze goes, the daily squeeze kind of fired and kind of consolidating now, and the histogram's kind of coming down, but this is coming back to the zero level here. So if you look at the weekly, we are actually four bars into into a weekly squeeze, and um, these can be pretty strong signals. These weekly squeezes when they fire here, you can see, you'll get anywhere from 8 to 12 bars sometimes, firing in that direction. Example here, in December of 2021, um, this thing fired for, 1, 2, 3, 4, 5, 6, 7, 8 weeks. So let's say, potentially we're halfway, at least very minimally halfway through through a weekly squeeze. So there's still maybe some upside for WTI. So we're going to want to keep an eye on that. And other key, obviously, tickers that we talked about. Nvidia. Nvidia broke key support, um, and looks like it's building a weekly squeeze that wants to fire down. So we talked about potentially, 160, 163 to 160 is going to be the next key level to hold on Nvidia, and then if it doesn't hold that range there, you're looking at this 153 level. So 8% of the SPX, Nvidia's 8% of the SPX, so really heavily weighted, and will obviously put pressure on the whole market if Nvidia falls more significantly. Apple is another one, obviously, huge weighting, and Apple is pretty much kind of in the same boat here. We got some key support levels that we need to hold here on Apple. 242. Once we kind of break down this level here, it can fall a lot more. But some of the diagonal trend line, I like, vertical trend lines are probably, you know, more, I would say, simpler to kind of follow as far as levels and stuff like that. But it is right to identify long-term trends and long-term trend lines. So example, potentially on Apple, you have something that looks like this, right? Here's like a long-term trend line that we want to see respected if we do fall down. So let's say like 200. Near term, you can definitely see that there's also, um, something like this perhaps that is, we could potentially bounce off of this trend line. Lots of touches here. So this is the first trend line, obviously, that we're going to want to hold on Apple. And then below that, we can look to these lows over here, and then this trend line down here if we fall further. So kind of, it has this kind of has the makings of looking like a false breakout, right? It's like this thing tries to break out and then falls back down below the highs. We'll see. We'll see what happens. So that's Apple, Nvidia. We talked about SMH. The semis really important. VanEck Semiconductor ETF, and you can see I have this level here. I have an alert in case we cross this level here. Breaking down this support here is going to also put additional pressure on equities here. So if you want to draw a trend line, you can basically see that this kind of parabolic move here is kind of breaking down. So breaking down below this level here is going to start to probably trigger some stops. And you might see 350 if this breaks down on SMH. So some of these ideas, some of these levels, you can kind of formulate plans and ideas off of for, short-term swings to the downside. If you break down key levels, I gave some kind of breadcrumbs, earlier in the week for Google and for um, some other tickers, like Google, for example. um, we were monitoring, this pattern here, this consolidation for the breakdown here. Once we started to see that, um, it was pretty clear that we were going to get a pretty good decline. We were talking about this for a while, and we finally got the breakdown here. So coming into this level here, I was first targeting this 270 level here, but um, there's not there's not much below 270 until you start getting into these swing lows over here. So wouldn't be surprised, if we get down to 240s on Google at some point, unless there's some catalyst positive catalyst in the near future, which can happen. I'm just not super optimistic about that right now. So just the trying to play the trend. As much as we want dip buying opportunities, we have to understand when the market is not favorable for that. And right now, it doesn't look like buy the dip is the camp that we want to be in. So Google, also Amazon. Let's see here. Remove these drawings here. Excuse me. We got a trend line here on Amazon that certainly looks like it is starting to break down a little bit, right? A lot of these look, this kind of looks similar you know, to Apple, right? Kind of like a little maybe fake breakout, and then something that I monitor, something that I look for like in price action is when we poke our head up above, you know, key resistance, and then like that strong reversal, and then the breakdown of a trend line. You start kind of building a case for what's going on and what the sentiment looks like. You know, it's like this thing tries to break out, and then this strong rejection, and now kind of breaking down of this longer trend line going back to January of 2023. So I think it's important to watch these Mag 7 names, or Lag 7, if you will. I've heard Bag 7 at this point. Um, some of these are down. Here's the Mags 7 ETF. You can see clearly that this thing has been just getting rejected off of this here. And we closed last week at 55.45. So Um, definitely worth monitoring here. Obviously, this is the tech heavy Mag 7 um, stocks, and they as a group they do not look good. So yeah, so I mean, as far as the week approaching the week ahead, definitely we have some key levels on the downside. Let's take a look at the SPX, closer look. I'll give you some stuff that I'm going to look at heading into. We'll see what happens when futures open up, and we'll see what levels we can um, look at going into tomorrow's open. So take my fib tool here. I'll just take last week's candle, and we'll do this. Basically, 50% of last week's candle. It's about 6,500. So if we're going to stage some type of recovery bounce, we got a pretty big hill to climb here. 64. We talked last week. We were talking about, um, the 64.73 level, 64.75 to 64.73, and you could see on the daily chart, we were kind of monitoring it right into Thursday. If you look at the daily chart, so here was Wednesday, here was the previous Friday, and the low that we had made was 64.73. We had the gap up, the consolidation, and then obviously heading into Thursday, we were watching this level here, this key level to hold. Thursday closed right at those lows there. So 64.73 was tagged, and then we closed right above at 64.77. So that level there um, got breached, and then obviously very strong decline on Friday. So lots of sellers there. And, if we're looking at the daily candle from Friday to get a little bit more granular, we're looking at trading above 64.04 for a bounce to possibly fill this gap here. And if we do break out and we get some positive momentum, 64.53.73, a break above, likely fills the gap back up to the 64.73 level, and then possibly we can touch this extension here. But this is kind of near term. So if we trade back up into this level here and then reject, and we come back down below our 64.04 pivot, 63.54 is going to be key support. And to the downside, we're going to look at some of these levels here that we're talking about. 62.92 is the extension on a breakdown of here. And then obviously 61.92 is the 2618. This level here is going to be likely a pretty good spot to bounce, I would think. If I had to guess, I think that this, I don't know if we're going to get these sweeping down moves. This feels, while this looks like it's pretty severe decline, and it is percentage wise, it does certainly look like it's kind of controlled here, right? It's not too um, straight down. So let's just assume that this pattern maybe continues. We can certainly bounce back up in here, and then potentially come down and test that 6,200 level. Um, that's my thinking, because these big sell-offs, these big moves down, they often have pretty strong snapbacks to test back up to the top of the channel. Um, and you can see like these once you get back up to the top of the channel here, these are small doji days, so these are tight, kind of tight spreads between open and close, kind of indecisive, not a whole lot of um, range here on some of these daily candles here. So some kind of indecisive. So some consolidation and then kind of selling back down and then possibly a bounce to test the top of the channel. Excuse me. So yeah, yeah, Chromosphere Mags is going to have some massive weekly hidden bullish divergers when it turns north, and the daily is yeah. I think that uh, I think that you're definitely going to start seeing some divergence, but I don't, right now, as far as the daily, there is um, there's no divergence really building here. Like on Ready Aim Fire here, the oscillator is still kind of trending down here and trending down with the market here. More, something like, let me just give you an example of something that I would look for, divergence. Like look look back here. This decline here, for example, from February 25 to April 25, and then the oscillator, um, you know, is doing one of these. So I'll want to see something, and so basically, I mean, can certainly go a lot lower. It's not like we're that extreme yet, but um, I like to see um, a longer, a little bit of a longer trend, if you will. So yeah. Um, any questions? Any charts anyone wants me to look at? I can take a look at that stuff now if you'd like.